Ladies and gentlemen, good day and welcome to the Bajaj Consumer Q3 FY23 conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhuwania. Thank you, and over to you.
Yes, thanks. Hi, good morning, everyone. It's our pleasure at ISEC to host Q3 FY23 results conference call for Bajaj Consumer Care. From the management, we have Mr. Jaideep Nandi, Managing Director, Mr. Dilip Kumar Malu, Chief Financial Officer, and Mr. Richard D'Souza, AVP Finance. I would like to hand it over to Mr. Jaideep Nandi for the opening remarks, post which we can open it for the Q&A session. Thank you.
Thank you, Karan, for hosting this call. Good morning, everyone, and best wishes to all of you and your families for a wonderful 2023. I'm delighted to have you all join us for this call. Let me take you through the performance of the company for the quarter and 9 months ended 31st December 2022 before we open up the house for questions. We continue to witness unprecedented inflation across a wide basket of commodities, impacting disposable income. As a result, consumer spending adversely. While there has been some easing of commodity prices and supply chain pressures, inflation still remains a significant challenge. The overall hair oil market has for Nielsen declined by 4.4% in terms of volume, with similar value decline in Q3 FY23 over the same period last year. While urban markets have seen a value decline of 2.1%, rural markets witnessed a steep decline of 7.5%. The decline in rural is in line with similar trends in the previous few quarters, as consumers, especially at lower income levels, feel the pinch of both inflationary pressures and reduced disposable income, leading to downtrading and prioritizing essentials over discretion. The long-term MAT December 22 decline was witnessed across all categories in hair oils, with steeper declines in premium categories as against mass categories, which also underwent some decline. The company reported sales of INR 125.5 crores, translating to flat value growth over the same period last year. For the 9 months ended, reported sales were at 696.8 crores, delivering a growth of 7.3% in terms of value and 4.2% in terms of volume over the same period last year. Sales of NPDs doubled in Q3 FY23 and is now contributing to 13% of the overall company saliency. This expansion of NPDs is in line with the long-term strategy of the company to build a robust portfolio beyond ADHO. The gross margins of Q3 FY23 was at 53%, which was lower by 240 basis points over the same period last year, mainly due to steep commodity price inflation. Change in product mix also contributed to the same. Change saw improvement of 120 basis points with softening of material cost. For the 9 months ended, gross margins was at 53.1% as against 57.6% for the same period last year. The prices of LLP for the quarter were higher by 32% over the same period last year due to surge in crude prices, post the Russia-Ukraine war, depreciation of the INR against USD, and tightening of refining capacities. Sequentially, LLP prices have corrected by 8% on account of overall weakness in demand. On the other hand, RMO prices remained stable in the current quarter over Q2 FY23. To mitigate the inflationary trend, cost-saving initiatives continue to be driven to bring structural reduction in material costs and overheads. A&P spend for the quarter was at 18.9% of sales, which was higher by 6.4% in absolute value terms over the same period last year. For the 9 months ended, A&P spend was at 18.6% of sales, translating to an increase of 26% in absolute terms over the same period last year. The significant increase in A&P spend is an account of increased investments on the new products. The EBITDA for the quarter was at 34 crores with a margin of 15.1%, whereas the PAT for the quarter was at 33.7 crores with a decline of 15.8% on a year basis. For the 9 months ended, EBITDA was 102 crores with a margin of 14.8%, whereas the PAT was at 98.8 crores. Retail continues to scale up with a double-digit growth on the back of loyalty programs, which has also helped build the NPD portfolio across urban areas. Retail, as you are aware, has been a focus for us for the last 2 years as a company. Rural slowdown continues to remain a concern and offset the growth in urban driven by retail activations and wholesale revival. Both the focus businesses of modern trade and e-commerce have registered excellent growth once again as both channels continue to scale up well. The performance of non-ADHO portfolio in both these channels have been very encouraging, as is the ADHO performance as well. Modern trade grew by 41% in Q3 FY23 over the same period last year and now contributes to around 9% of total sales. Modern trade business has scaled up 2x over the last 2 years in the first 9 months of the year. Our strategy of focusing on channel-specific SKUs in select key markets as well as new products have been yielding good results. During the quarter, we acquired a significant market share in top retailers. Canteen business also saw a revival in Q3 over last year. E-commerce continued to scale up well, achieving a growth of 84% in Q3 FY23 over the same period last year and now contributes to 7% of total sales. Contribution of non-ADHO portfolio is scaling up sequentially. E-commerce business has scaled up 4x over the last 2 years for the first 9 months of the year. We recorded highest ever market share on a leading e-commerce platform in a non-event month. Growth in almond drop extensions, that is almond soap plus almond and argan and serum in oil, have also been very encouraging. The consolidated international business reported a strong growth of 36% in Q3 FY23 over the same period last year. New channel partners appointed in major countries in Middle East, Africa region have been starting to yield results, helping drive top-line growth. Nepal saw muted growth due to macroeconomic environment in the country. Rest of the world performed well by new geographies and new portfolio introductions. During the quarter, ADHO registered a mid-single-digit value decline due to weak demand conditions in key HSM, especially the rural markets. Share of Amla portfolio remains steady in mid-single digits at an all-India level. Steady progress is seen in Bajaj 100% pure coconut, and consistent sales is now driven by repeat demand and distribution. Bajaj Coco Onion saw good traction in modern trade and e-commerce. Almond Drop soap is supported with TV media plus digital and continues to receive positive and encouraging feedback from consumers. Listing of the brand has been done in large modern trade chains this quarter. Almond plus argan oil and serum with oil under the Almond Drop extension portfolio have been live on e-commerce and will drive offtakes in the coming quarters. Our range of digital-first brands, Bajaj 100% Pure and Native Soul, are also being supported with digital marketing and are scaling up as per plans. We will continue to invest strategically in these 2 brands in the digital space going forward. We continue to provide media support for ADHO across TV, digital, as well as print, supporting key markets. The company has recently signed up with popular Bollywood actor Kaira Advani as its brand ambassador for ADHO. The latest creative with Kaira, Boring Nahi, Banja Tufani campaign aims to connect the brand with young women to further consolidate its market leadership in the segment. As the new face of the brand, she will feature in a series of high-energy marketing campaigns and events in the coming months. The social media activity towards the new ADHO campaign, Daro Nahi, Dare Karo, registered 1.3 crore views over December-January. Community marketing for ADHO on beauty, parenting and lifestyle reached 63 lakh people in around 200 online communities. The almond SOP has increased from 8% to 17% in these communities. We continue to make visible progress in our ESG program in line with our 3R philosophy of reduce, recycle and reuse. We continue to take initiatives for reducing carbon footprint and greenhouse gas emissions. These initiatives have led to reduction in consumption of glass bottles by 8% this year, over and above 16% reduction achieved last year. Similarly, in laminates, we reduced our consumption by 6% on top of 14% reduction last year. The company continues to focus on reduction in usage of natural resources like water by monitoring the water consumption sources and installation of controls at critical places. This helped us reduce water consumption by 34% in 9 months FY23. Steps taken in process improvements at the plant help in reduction of wastage of certain critical categories like laminates by around 25% over the last year. So while we see raw material slowly coming off its peak and the gross margin pressures easing slightly, the company will continue to invest in its existing brands as well as new launches to support its long-term growth aspiration of diversifying its portfolio beyond ADHO. As we expect the markets to normalize in the coming months and RM prices to soften, we believe we will be in a much stronger position to reap the benefits of the portfolio expansion, which we are already seeing yielding results. This would lead to de-risking ADHO, having a consistent and robust top-line growth as well as better EBITDA margins going forward. With that, I end the opening remarks and open the session for questions. Thank you.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question on the line of Varun Bang from Branston Investments. Please go ahead.
Yeah, thank you for the opportunity. I have a couple of questions. So first one is on ADHO segment. So if I were to take a slightly longer term view on ADHO segment, given how the consumer preference is evolving around hair oil, in a normalized environment, what sort of opportunity do you see in ADHO segment? Does it still have potential to grow 4 to 5% in volume terms over long term? Is it possible? Or can you share your thoughts?
Yeah. See, if you look at currently the way we are witnessing, because of this downtrading in urban, if you look at this downtrading is not that obvious. In fact, urban markets, even ADHO has been performing pretty well. It is because of this sharp decline that is happening, and especially the markets. Unfortunately, that's the trend we are seeing as far as our company is concerned. That in spite of so many initiatives, especially exactly where it hurts is hurting us most, which is the markets of, let's say, UP, MP, Bihar, and Chhattisgarh, Jharkhand. I mean, that belt, which is consistent story for the last 3-4 months. Even Nielsen data specifically shows, let's say, UP is down by 12%, Madhya Pradesh is down by 10%. So that is where which is hurting us most. Other than that, if you ask me in terms of expansion of ADHO is concerned, I mean, there are a lot of pockets in the country where we feel ADHO can still further grow, and those are where we are seeing the growth happening as well for ADHO, whether be it in the western and the eastern markets and some parts of south, maybe not the entire south. So we are seeing good green shoots happening as far as ADHO is concerned. And if you look at, because of the democratized markets through modern trade and e-commerce, there also we see proliferation of ADHO in markets which are beyond our traditional strength HSM markets. Is the HSM markets which is today a concern? And if you ask me, is the markets normalized, if the demand conditions were to come back, overall demand, where the basket, where the discretionary basket for the people, I mean, they are able to spend money on disposable income. I personally think that kind of growth is easily doable.
Okay. And on new products, so in the products like Coco Amla, Coco Onion, then we have range of products in Bajaj 100% pure, and then range of new products we have launched under Almond Drops category as well. So given that this market is crowded with lots of new age products, what is our right to win in this market, and how do you think we stand vis-a-vis the competition? And if you can just share your thoughts slightly. Over slightly long term, how do you think we need to position ourselves?
Yeah, so absolutely right. In fact, when we launched the soap, we were absolutely aware in a 20,000 crore completely saturated market that we are launching a brand in a very saturated market. But as we had made the commentary at that point of time, and we are clearly seeing the results bearing out now, the launch was not only a part of a product launch in a soap category. We wanted to launch in the entire almond category itself. We wanted to own the entire almond category, and that is where you see now a plethora of products coming up, We have the serum, which is tracking well in the e-commerce and modern trade channel. We have that almond plus argan oil, which is already tracking well. Soaps has already started showing good traction. It's still, obviously, it's a cluttered market, as you have rightly pointed out, so there'll be a slow growth, but with our consistent push in terms of TV ads, etc., we are seeing traction coming in. And now there'll be one or two more products which you'll see coming up in the next few quarters as far as this almond. So almond category, almond drops extension category is something that we want to develop as a 10 to 15 products over a period of 3 to 5 years, which we want to push. And I think that category of almond drops, which is where we feel that we have some ownership, I mean, that we want to proliferate across consumers, and wherever we have done consumer dipsticks, etc., we see that the fact that it is coming from the house of Bajaj with the almond drops umbrella, that itself is a good right to win. And as far as the product is concerned, they see a value add as far as this part of the portfolio is concerned. As far as the hair oils portfolio is concerned, or the oils portfolio, if you look at whether it be an amla, whether it be an coconut, I think there is enough proven record for us that we are seeing good traction. I mean, today you see the new products, which used to be one of our key concerns, that we do not have a portfolio beyond almond drops. That today, that NPD is now sitting comfortably at 13%. Both your quarter number saliency as well as your year saliency is at 13%. If the hair oils market were normalized, it was not at this minus 4.5% overall market situation. And if you, then I think we would have been a far better situation. If you look at the commentaries of the various hair oils players, and you look at us, I think in terms of hair oils with a growth of about 7% yearly, I think we are doing fairly well as far as hair oils itself is concerned. It's just that the market, if they were more buoyant, you would have seen the results coming up in terms of our portfolio expansion, and these numbers would have been far stronger. Yeah.
Are there a weekly track successes of these products? I mean, how would be the repeat demand for some of the differentiated products? Is there a strong pull factor that we are seeing? What is the sense that you're getting?
So that's one thing. So now most of these products are already, I mean, except the almond serum and oil, these are just been launched. So now none of them we are doing too much of primary sale. I mean, quite a few of them are, let's say, e-commerce focused, except soap, which is obviously GT focused. So it is now beyond the level of where only primary sales has happened. If you look at, and consistently our focus has been to continuously focus only on secondary sales. If you look at both the quarter as well as the year, our secondary sales for the quarter in general trade, for example, has been 5% more than primary sales, because that's been the conscious focus, that reduce inventory, get it to as low as possible, so that at least you can focus on actual sale that is happening. So that way, I think most of the sale that you are seeing is actual sale happening right up to the consumer.
Mm-hmm. And assuming that we cut down on our ad spends 2 years from now, so would these products continue to see traction? Is what I wanted to understand.
So different products will see different kind of let's say tracking that is happening. If you look at today, ADHO gets about 60% of our ad budget, and new products get about 40% of our ad budget, and roughly about 25% of our spending is on digital. Now, slowly, the digital component of our component itself is going up, and the moment you increase your digital component of your ad spend, obviously your total the cost itself will also keep going down. And moment these products start showing traction, today it is 13%, and we have far higher aggressive plans as far as taking these NPD numbers higher as concerned. So as a percentage, obviously the ad spends will keep falling. So today we are at 18-20%. We intend to keep it like that somewhere till maybe next year, and then slowly start bringing it down to the levels of that 16% or so, which is what we want to stabilize it at.
Okay, thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Percy Patanki from IIFL. Please go ahead.
Sir, I just wanted to make sure I heard that correctly. You just mentioned that you have grown 7% in the hair oils segment. Is that right?
That is correct. On a 9-month basis.
Achha, on a 9-month basis. Okay. And how much for this quarter?
The quarter is actually flat. So the quarter sales, your value sales is overall also is flat. Your hair oils is also flat.
Understood. Secondly, just wanted to understand what is the percentage contribution of ADHO to the total company now?
So ADHO, total we have now 85% contribution coming out of ADHO, 2% is coming out of the traditional brands, and 13% is coming out of the new products.
So when you say new products, you are including this onion oil and native soul, Bajaj pure, everything put together, is it?
Yes, absolutely. The definition of new products is everything that has been launched in the last 3 years. Anything that has been launched in the last 3 years, and we will keep dropping anything that goes outside the 3 year bracket.
Understood. And this 13%, even if you're not giving exact numbers, but any kind of flavor you can give how it is distributed, this 13% among the various initiatives?
So if you look at in general trade, the launches has been only a few products. It has been basically the Amla range, the cocoa range, and the soap. So general trade, the distribution is of that. And as far as e-commerce is concerned, it is all of this, as well as, let's say, any extensions of serum and almond oil, as well as the digital brand. If you look at the e-commerce and even the modern trade, quite a bit of it, it is very, very democratized. It's all of these are tracking well. If you look at our partners like Amazon and even Flipkart, all of these brands are tracking very, very well. As far as general trade is concerned, obviously the product range is restricted. It is, as I said, the Amla range, the cocoa range, and the soap, and it is distributed between these three only in general.
Just looking for at least the sequence in terms of size. I mean, which is the largest amongst Bajaj Pure, Native Soul, the cocoa range, the onion range? Out of these 4 or 5, if you can just arrange them in descending order of size or something like that, it would help.
See, because of your sheer general trade presence, both your Amla range as well as the cocoa range, that is the entire coconut portfolio as well as the Amla portfolio, both of them in terms of size is much bigger. And beyond that, if you look at all of them are tracking in similar trajectory. Soaps are a little higher, and I think Native Soul, the serums, etc. has just come in, but showing good traction. In fact, the almond extensions are showing pretty good traction, and we are very buoyant about both the serum as well as the oil in serum as well as the almond argan oil has been showing good traction, and we are planning to launch a few more in this almond extension category because we are seeing that tracking very, very well. Yeah.
So over a 3-year period, I think the ADHO salience has gone down from some 92-93% to maybe a 84-85%. So if I look at only ADHO, over a 3-year period, is that product flat in terms of revenue, or has there been a revenue decline, and if so, by how much?
So this year you would have a little bit of a revenue decline, but overall, if you look at a 3-year period, it has a little less than a mid-single digit growth. It's close to about a 3% growth over a 3-year period. Value-wise, right? Yeah, value-wise. In fact, volume-wise, it is more or less flat.
Understood. Next question is on margins. If we look out the 2-3 quarters from now, what kind of margins do you think at a company level we can clock? Are we sort of set to go back to a high teens EBITDA margin in 2 to 4 quarters, or will it take longer than that?
So let me answer you. See, if you look at our cost basket, the 2 costs which are basically impacting our EBITDA margins are basically the gross margin as well as the marketing cost. Marketing cost, I have already told you, given that we are investing and as we are seeing traction, that 18 to 20% is roughly going to remain for the next 4 quarters or so, and then we'll, I think, as the business scales up, we'll see a natural reduction of these marketing costs coming down to about 16%. That's as far as the A&P spends are concerned. If you look at the gross margin dilution that has happened, just to give you a sense of where we are seeing, it's roughly, let's say, a 5.5% gross margin dilution that we see. about 4.5% is coming straight out of only raw material. I mean, we do a pure maths. It's about 4.2, 4.3% is coming out of just RM prices, which is basically impacting our gross margin. And the balance of about just a little more than 1% is due to the product mix. Because what we have also decided is we will go ahead with products other than maybe in the hair oils, which is the upper range. Other than that, we will go ahead with products which have decent gross margins and EBITDA margins for us to be made. That's the direction we have taken for us. So all the products that you saw that we mentioned have decent gross margins, and going forward also, I mean, that's the basic benchmark we have put for ourselves, that only products which have decent gross margins or high gross margins are the ones we will launch. So with that, this is how the breakup stands. So as the raw material prices stabilize, you will see this one straight away flowing back into us. That margin dilution of about 1.2% or so that happens due to the product mix, that obviously will not flow back, and we are comfortable with that.
So given where the spot prices are, not consumption, but the spot prices where they are today, if they were to maintain for the next several quarters at that level, then do you think there will be any improvement in gross margin because you are using input costs which are priced higher than spot, or that's not the case?
No, just one second. So, in fact, we have had, 200 basis point improvement. So, we have had a 200 basis point improvement on the current spot prices. You already see an improvement also on our gross margins happening itself, right? So, I see, I mean, it will be more a function of how we see the LLP prices moving in the next 2-3 quarters. We see that the prices have already stabilized or rather normalized quite a bit, and with the weakness of demand, we feel that LLP prices can further go down a bit. But this is
what I meant was, are today's spot prices higher or lower than the Q3 consumption price?
Today's spot price is lower than Q3 consumption price.
Okay, so Q4 should naturally see some more gross margin benefit over Q3.
Yeah, let's see. This is just the middle of the first or second month, so we see how this pans out. But if this trend remains, yes.
Sure. Okay, that's all from me, sir. Thanks and all the best.
Okay. Thanks, sir.
Thank you. We have the next question on the line of Gaurav Gandhi from Glorytail Capital Management. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, our advertising and promotion spends, I want just the breakup of how much is for the incentives and how much is for advertising.
No, this is all advertising. This incentive is not part of A&P. This is accounting, right? Incentive.
All right. As that is pretty much higher, so that's why I was asking.
This is how we have always kept it. And 60%, as I said, 60% of the cost goes into ADHO and 40% goes into new products.
All right. And sir, with our new product, that serum with oil, how much are you confident with this product, and how will it perform? Because serum is the category which is attracting, younger India is attracted towards that. So how much are you confident about that product?
So we have launched this product in both this as well as the almond with argan oil, which is about 50% premium over the ADHO itself. Both these products have gone into modern trade, more in e-commerce first and now into modern trade. And we are seeing good traction happening as far as the serum is concerned. As a product, in fact, all the products that we have launched in terms of consumer, we are getting good traction and good feedback, including our AD soap itself. So as far as the almond extension is concerned, we are slowly seeing that niche is getting carved out as far as our portfolio of almond drops products are concerned. And as we see more products getting launched, and you will see more products coming up.
My question was regarding is it a regular serum or serum with oil? I mean, what is the product exactly? Serum with oil, will it be something different from the regular serums which are present in the market?
It is a very similar product. It is similar serum with oil, which basically adds to the nourishment. I mean, not only does it reduce frizz control, it adds oil also as well as USP.
All right. And the next question is
oil as one of our key things. So this just accentuates the oil part of the product. I mean, serum is for frizz control. This oil adds into the nourishment.
Right, sir. And the next question is on the Nomax brand. Do we produce that or have we stopped producing the Nomax brand soaps? Because, what my observation on ground says that the almond soap which we have launched has a similar appeal to many other soaps. For the people at large, and it is bit saturated. But Nomax soaps are something different, and people we might we might create a differentiation with that product in the soap category. So, what are your thoughts about that?
Actually, I would like to politely disagree with that. The Nomax soap actually did not bring in any specific attribute itself, because Nomax by the name itself means that you will leave no marks, and it was more like a no scar kind of a brand. It was not. It really was a very different portfolio, which was through the OTC channel that we are servicing, and mainly in the Bihar, UP markets, etc. So the Nomax as a brand remains, but the soap itself, I would like to think that the AD soap has a far higher product proposition than Nomax soap itself. So Nomax soap itself will not get pushed. AD soap, obviously, yes.
All right. And the last question is, do we have any plans to get into some of the products where the growth is higher and include those products in our basket, because our existing portfolio is almost saturated and Bajaj has very good, very fine goodwill in the markets to penetrate easily. So how should we look at that, and also how should we look at the company in, say a slightly longer term, say 5 to 7 years of time frame? Can you throw some light on that?
Yeah. So as you said, as we embarked on the journey earlier, maybe a few years back, the objective was to de-risk ADHO and create a portfolio where Bajaj has a right to win. So we had identified two areas where we saw, with our consultants, etc., that we worked, and with consumer studies. The two areas is where Bajaj can work, which is the hair oil space itself, which is what we have filled up with quite a few products offerings, and now we cover about 85% of the overall hair oils market in terms of product offering. And on the other side, using the almond drop extension in skin and oil category, skin and hair category, which is what we have taken up for the next 3 to 5 years to take on. So this is what we have been pushing. We also feel that there is some more scope of the Bajaj brand name, which is an Indian brand name, which is a very traditional, trusted Indian brand name, with more categories as far as the personal care space is concerned. This is under consideration, and as and when you see it coming, we will come back to it. Again, the criteria will be where we see growth potential and where we see a gross margin to be there. Only products where we feel that can be exploited with a Bajaj right to win is where we would like to get it.
All right, sir. Thanks a lot. Thank you very much.
Thank you.
Thank you. We have the next question from Shirish Pardesi from Centrum Broking. Please go ahead.
Hey, hi Jaideep. Good afternoon. Thanks for the opportunity. Just 2-3 observations. When we go back a year before and we started saying that we have launched coconut and we are trying to look at the penetration, and then we launched the Amla segment. If you look at the observation last 3 years, low Amla has grown very fast, and there was a down trading which is happening. But right now, when I connect the dot with Nielsen, the rural is still declining 7.4% in volume terms, what you have stated in the presentation. So, can you give some benefit? What exactly we are trying to make? Because if almond drop equity is premium, and we have launched Amla, but the growth rates are still falling, and as a company, would you guide what is we can expect in next 1 year?
As I said, if you look at Shirish in terms of hair oils, I think we have overall, if you do a comparative analysis, I think we have performed well. Either if you look at the quarter number in isolation only for the hair oils, or you look at the 9-month period. I think across all companies put together, I think we are tracking pretty decently. Having said that, specifically Amla, we have taken a strategic call saying that given the kind of bloodbath that is happening in the Amla market today, as the market we wanted to stay out of some of the lower price products as far as the Amla is concerned, which is more the 10 rupee, 20 rupee pack specifically, because we thought with the current structure of LLP and RMO and all the other raw materials, you really can't make too much of margin with the kind of pricing that is happening in the market. So we actually took a conscious call in Q3 this year, end of Q2 and Q3 this year, where 10 and 20 rupee packs of Amla that we defocused on because there was no money to be made. You would have got top line growth, but margins would have collapsed further. So this is what we have taken up. I mean, Amla, still the larger packs have been doing well, tracking well. We'll continue to support that. And as we see RMO, LLP, they were to stabilize, etc. I mean, this is a segment, even the LUP is something that we'll definitely go back into. So as the hair oils market is concerned.
That's helpful. My second question on HSM market. Last 4 quarters we have been talking about HSM market. There are pain points. We started saying that we are expanding the van distribution, and then in between we tried to escalate the efforts on the wholesale pack. Where are these initiatives? Are these initiatives really yielding any efforts? Because quarter on quarter we are seeing that HSM is becoming a pain point for us.
Yeah. So if you look at even HSM markets, again, it's again a very consistent commentary, unfortunately, that the entire HSM as a block is not what is doing badly, neither for the country nor for us. Is the northern part of the HSM market, which is Delhi, Punjab, Haryana, Rajasthan. That belt is still good, even for us, as well as far as Nielsen data is concerned. Yes, there are some blips here and there, market-wise, but otherwise, overall, we are doing well. It's this market of which I called out, which is UP, Bihar, Madhya Pradesh, Chhattisgarh, Jharkhand, which is where the problem has been for the last 1 year. And not only Nielsen data, even we are facing. Unfortunately, our saliency is high, and so this is what we are grappling with currently. But we are seeing some green shoots coming up, and hopefully this should slowly start normalizing as the year goes by.
Okay. My last question on the gross margin or EBITDA margin. A year before exactly, you guided that we will take a hit on the EBITDA margin, but we will spend money on the advertising. So maybe if I look at next 4 quarters, I mean, not the guidance per se, but if you can provide the direction where we are heading for the gross margin, given the context that the RMO prices are softening and the input material is also softening. So maybe your qualitative comments on that.
So I gave you the this thing on gross margin, how it has got diluted and what is the recovery back. So of the 5.5% gross margin dilution that we saw, about 4.3% was coming out of the raw materials, alone the raw material itself. That is after the pricing that we have taken, and about 1.2% because of the product mix change that has happened. That 1.2% is a deliberate conscious call, and we are comfortable with that. That 4.2 is a function of how the market prices stabilize. We have seen already a gross margin improvement that has happened over Q2 because of the raw material softening, and we are expecting that in Q4 and Q1 it might further stabilize. We expect the RMO prices to come down a bit with a good crop, and LLP we have to see. I mean, this is a function of how it is. But if these prices were to go down, you will see a direct contribution happening as far as the EBITDA is concerned.
Okay, thank you, Jaideep, and all the best to you.
Thanks, Harish.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Mohit Mehra from Guardian Capital. Please go ahead.
Good morning. Thank you for the opportunity. I wanted to ask you about the demand recovery, especially in rural area, now that commodity price inflation has started coming off. How do you see that? And secondly, how have Jan volumes been so far?
So answer the easy question of the second part is that I can't give you guidance on January, so we'll have to leave January out of this discussion. The second part is rural demand. Unfortunately, we have been hearing commentaries earlier after the Q2 earnings call that rural expected in Q3, Q4 to be better. I think after Q3 we hear the earnings call to be far more muted, and I don't think there is a very clear directionally improvement in terms of rural demand. I don't think there is a very, very clear near sight of that the rural demand is going to be very, very much better than what it has been in Q2, Q3. So Q4, I don't think there will be a huge improvement in rural demand. Having said that, we clearly see urban doing pretty decently well, and some of the markets which I called out earlier, have been still okay. It's the poorer markets, which is where the low income markets is where the problem in rural remains, and I don't think that is going to get sorted out in Q4 itself.
Got it. Thank you.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Kostu Pawarskar from Sharekhan. Please go ahead.
Yeah, good morning, sir. Thanks for giving me the opportunity. So my question is on the new product launches. So currently, NPD contribution is around 13%. At what level of contribution you expect it to contribute materially to your profitability, so that there would be kind of a risk for you over the period of time? So for example, if you say 20-25%, it should start contributing materially to your profitability.
So if you look at on a net contribution basis, quite a few of the products are today profitable, except the ones which are getting very, very high media investments, disproportionate to the sales that is happening. Only those are a bit negative at the current stage, but some of the products already a bit positive. And that's why we talked about rationalizing of some of the costs that some of the products that we are selling in terms of SKUs that we wanted to sell, etc. Because keeping it a bit positive is one of the things that we wanted to do as a structural thing even when we started the business. I mean, this gross margin reduction that we see is what is hurting us. Otherwise, in terms of basic fundamentals of business, in terms of how we want to take each of these products, except one or two, all of them are keeping them to be net positive in terms of margins. And by net positive, I mean that all the marginal costs for the product is taken in, not only just the gross margin.
Yeah. So can you explain this? Which are these products which are currently profitable of the new launches?
As I said, except for the ones where there is high media investments happening, except those, most of them are positive.
Okay. And in last 1 year, have you lost any market share in almond drops?
So almond drops, the market share remains more or less steady. I mean, it is in that hovers between the 63 to 65%. So that's where it remains at. So yeah, because the LHO market itself has also declined substantially. If you look at the Nielsen data, LHO market itself has declined by about 8.6%.
Okay. And sir, the new product launches which you did into general trade, are some of these launches done in smaller unit packs, or you are comfortable launching them in a bigger packs and the traction is good for whatever launches you have done in them, on general trade?
So large part of it's you really can't launch in bits and pieces in terms of not launch the entire range as far as the product is concerned. So launches happen across all ranges, but the support may not remain across the LEPUs at this stage. So the low unit packs, which is typically the 10 rupee, 20 rupee pack, is not something that is supported by the company because of the gross margin profile that currently exists. Not to say that they will not happen in the future, but at this stage that are not getting supported.
Okay, sir. Thank you. Thanks for that.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Saket Malpani from Precision Capital. Please go ahead.
Hello, sir. So my question has been first on the buyback side. So what was our intention with the buyback and how do you see that happening? And second is on the cash on the balance sheet, the current investment is close to 500 crore. Is there a plan to invest it further in other ventures?
Ladies and gentlemen, the line for the management has dropped. Please stay connected as we reconnect the management. Ladies and gentlemen, we have the management reconnected, so you may go ahead.
Are we back on?
Yes, sir.
Oh, thank you. Sorry. So coming back to your buyback and usage of cash. Buyback is basically a way of rewarding your regular shareholders. So we wanted to go into some steps of rewarding back our long-term shareholders, and that's the way we have got into our buyback. We have finished off our statutory mandatory 50% of our buyback, which is the minimum that you need to do before you can decide to call off or not. So we have finished that, and we have about 3 months still pending as far as the closure window of the buyback is concerned. And the buyback is still continuing as we speak. As far as the cash utilization is concerned, again, that's a way we'll have to see how we can both look at the interest of the business as well as the interest of the shareholders. So we have the dividend policy which has been there, and we'll see how that will pan out, as well as we are looking at investments. I mean, we had called out even earlier. We will keep exploring. We have not done any M&A till now, but we are actively looking at in terms of profiles where we want to invest in. And we are also looking at some of the markets outside India where we wanted to invest as well as some investments going in there. So this is how the cash will get deployed. We are not a very debt-friendly company, so we are not looking at leveraging ourselves too much at this stage. But if the situation arises, whether be it in terms of a large M&A opportunity, etc., we will not shy away from that.
All right, sir. Thank you very much.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Thanks for the opportunity. My first question is on the NPD side. What percentage of revenue do you think will be coming from new products, let's say, in the next 3 years? Like right now it is 13%. Where do you see that percentage going up to?
So our long-term aim for the next 3 to 5 years is that NPD, just organically, we think that the NPD can go anywhere between 30 to 50%. I mean, 50 would be on the higher side, but 30 is clearly doable. I mean, 30 is very, very clearly visible with the current portfolio that we have, and maybe taking it to about 40% is what I would say within the next 3 to 4 years is what we would be looking at. But that is just an aspiration at this stage. It will also be a function of some of the launches and how they track that we have for the next, let's say, 8 quarters.
And then ADHO at that point, is it fair to assume will become less than 50% because some of your new products that have been launched in the last 1 year will no longer be part of NPD in the next?
Let me then rephrase that. Yeah, technically you are right. So I will rephrase myself. I am including the products that we have launched, that taking us to that number of 30.
Understood. Okay. So what you're saying is like whatever you have launched in the last 2 years plus whatever you will launch in the next 3-4 years will totally contribute to 30 to 40%.
After the COVID period, if you were to look at those products, that should contribute about 30 to 50%, maybe 40 is more what we are aspiring for, and ADHO should take up to the balance 60. That's what we are looking at. Your current 85 should be looking at 60, and obviously the investments will continue on ADHO. Yeah.
Right. And if you do something in organic, then obviously the situation will change.
Then that's a different thing.
Yeah. And my second question is a couple of times you mentioned certain states which are hurting us more. So I'm just curious, what is your observation? Is it a temporary situation or there is something specific going on with our products, or is everyone hurting? If you can just give more commentary around those markets, especially UP, Bihar, which are very core to us, that would be helpful.
So we had taken up, we were looking at all the Nielsen data across other categories, so whether it be soaps, shampoos, etc., all the other categories. If you look at even categories like soaps, which is the largest category there, I mean, though there have been value growth because of the amount of price increase people have been able to take, you look at the volumes, in fact, soap is in a worse situation as far as UP is concerned than hair oils. Overall, it has minus teen kind of a growth rate that it is tracking. So across all other discretionary categories, wherever disposable incomes have gone down, so all the products that come under that category, we have seen there has been a steep decline. So it is not specific to hair oil. Hair oil usage has not really gone anywhere. Hair oil usage has, in fact, in the urban markets, there has been trend changes that we observe, and we have been able to ride that and take some benefit out of that, which is you seeing our growth in modern trade and e-commerce. But in terms of the rural markets, or let's say the core markets of UP, Bihar, etc., we don't see so much of change that is happening. It's more the money in hand of the consumer today, free money in the hands of the consumer, disposable money. And once that comes back, we feel that we have enough wherewithal to be able to get back. We don't have any specific issue, either be it in our distribution or in terms of our retailing or in terms of the product offering, etc., that will help us going forward.
So if I may ask a follow-up on this, are you saying that you are continuing with your market share and there is no competitive intensity that has gone up in those states? It is just that the consumer doesn't have the money to buy a premium product. Is that really what you're saying?
No, so competitive intensity is up, but the competitive intensity is not a like-to-like product. There has been down trading. There is no question on that. Both in terms of down trading and down purchasing. That is, LUPs have gone up, as well as the lower quality or lower price products have gone up. So we have seen a surge in the Amla products that have gone up, the lower end of the Amla products which have gone up, the 10 rupee, 20 rupee packs which have gone up, which clearly are not margin-making products. They do yield volumes, but they obviously will erode your gross margins quite drastically. So we are decided not to play very strongly in this at this stage.
Understood. Thank you so much. That's all I have.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Vaibhav B from Honesty and Integrity. Please go ahead.
Thanks for providing the opportunity. So on ADHO, for the overall almond-based hair oil market, what is it that what can actually drive the increase in the overall almond-based hair oil market as compared to the overall hair oil market is what I'm trying to understand, because we have been seeing that this market is a little stagnant or declining as compared to the other hair oil market. So is it price-based action? Is it more marketing? What can actually turn our cash cow around in terms of growth is what I'm trying to understand.
So there are two aspects of the question as I see it. One is growing the light hair oil market itself is concerned. Other is growing ADHO, which I think is a little two different things. As far as ADHO is concerned, I think we are taking two steps. One is obviously we need to get back our core. The core itself is now in a little bit of a difficult time, but that is not too much of internal issues that I see. It is more external, and we hope that when the external issues come back, we will be in a position to take benefit of that. The other two core areas where we think it is a growth part of our growth strategy, which we should take. One was basically looking at the unexplored or unexploited markets of ADHO, especially in the west and the eastern markets. Those are where I think we are seeing some good traction even today coming up. Not maybe the way we would have wanted to, given the again the demand scenario, but I think that is clearly tracking much better than our HSM markets. South is not somewhere we have still been very strongly present, and that I would have to admit is still an area of that we need to track, and I hope when the demand conditions come back is something that we'll focus on. The other area is looking at the modern age, the young customer of today who's more in the urban and the semi-urban towns. I think there we have done a pretty decent job through our digital marketing, connected with the young generation consumers. And you can see the results coming out in terms of both e-commerce and modern trade. The B2B part of modern trade and e-commerce, they are doing fantastically well. We have also been very, very conscious that we don't want to push the B2B part of it. So the B2C part of both modern trade e-commerce has been doing very, very well, and there is a lot of new gen customers who are today talking about it. And that's a very conscious strategy. We have spent a lot of money has been shifted to digital media as far as ADHO is concerned, and those are bearing fruit. And I think when the market stabilizes and demand conditions were to come back, and I don't think there is any inherent problem in the Indian economy as such that demand should not come back. I think we'll be in a good position to take advantage of these two growth legs that we have been pushing, as well as coming back of the core, which is the market that I talked about.
And so, do you want to touch our pricing premium as compared to other hair oils, or you don't want to touch that?
At this moment, I don't think the pricing premium is making too much of an issue, except for we're looking at strategically. But other than that, I don't think the pricing premium is hurting the brand. So we would not. While yes, you are absolutely right. If you look at a 5-year period, our brand has taken a little higher premium than what it was compared to the top 2 brands in the hair oils market. I think that is how we also see it. But I don't think that is resulting in any loss of business as far as we are concerned. 1 or 2 packs maybe we might want to do something, but we would also want the prices of raw materials to stabilize before we take on any action on that.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. We have the next question on the line of Abhimanyu Godara from Antique Stock Broking. Please go ahead.
Hello, sir. Good morning. So I just wanted to know, sir, can you give some flavor on rural demand and urban demand? There are commentaries regarding rural demand revival and the urban consumption growth, some moderation in the urban consumption growth because of already high base. So can you give some flavors for the coming quarters on that?
So again, if you look at while what you're saying is correct on an overall basis, for us, urban has always been most of our urban was based on what we used to do in wholesale, and our retail was comparatively not as strong as if you were to compare with some of our other competitors. So retail has been a focus for the last 2 years as far as the organization is concerned. We have been seeing good growth happening in retail throughout. In spite of this kind of a debacle that is happening in the marketplace, we have had good, strong double-digit growth. In fact, it is higher than mid-single digits. It's actually in the range of 20% plus as far as the retail growth is concerned. I mean, on a 9-month basis, and about 15% as far as the quarter is concerned. So retail is something that has been doing very, very well as far as urban is concerned. In fact, if you look at even wholesale today is positive. We did a wholesale revival last year. Last year we did lose out on wholesale. We did a wholesale revival. A lot of work happened as far as the wholesale was concerned. So wholesale has also revived. So wholesale is also positive. It's obviously not as strong as retail, but positive. So as far as urban is concerned, we are pretty strong, and we feel that for the next few quarters also, urban will continue to do well as far as BCCL is concerned, this company is concerned. The rural, if you were to sort out and if the rural market stabilize, I think it would be in a pretty good position.
Okay, thank you.
Thank you. That was the last question. I would now like to hand it over to the management for closing comments.
So thank you everybody for joining in this call. I think we witnessed a very interesting quarter as far as we are concerned. In fact, all the legs that we have been wanting to push in the last 2 quarters is now slowly starting to bear fruit. The new products have been good, giving us good traction in the modern trade. E-commerce also has been doing well. Even in general trade, it has been a mixed bag. While the overall numbers in general trade is not very healthy, but overall in quite a few of the markets that we wanted to push in terms of the western market, some of the eastern markets, and the up north market, they have been also doing pretty well. It's one block of market in general trade which has actually been pulling this company down, and I am very, very hopeful that once this were to sort out, and as we see the raw material prices softening a bit going forward, if this market were to be sorted out, I think we will be more or less back on track with the commentary that we have been talking of in the last 2-3 years of where we want to take the company, both in terms of growth as well as in terms of EBITDA profile. So thank you for all joining us, and Wish you all the best. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.